Quick review, the old week, like I've been away for a couple of days and I just came in and I picked up like a few trades, 1, 2, and they both drawing me into profit, 3 into profit again. This was a swing trade for yesterday, pretty cool. And we had a step index which resulted in a loss, but I had to retake it and it's floating in profits as I'm talking right now. And lately I love, one thing that I love is I always like state the very same thing about this EMA. Like the moment you see something that you've seen before, kill it. Like that's always my secret. I always say it in my free channel. To join this free channel, I'm gonna put the link in the description below. If you are interested, if you think you want to take your VIX trading to the next level by free advices from not a professional but a good trader like myself, click the link in the description. Peace guys, what is going on? This is Yalush from Nice Pip speaking, and today let's jump into the class and see what we got right. So today I'm looking at one thing that I rarely talk about, and that is the volatility 75 index. Now, if I don't talk about volatility 75, it does not imply that there is anything different from what we always talk about on our day-to-day. No, nothing different, nothing special. Price action will remain price action. Why? Because price is fractal. I always say this word. Now, why don't I actually look at volatility 75? The reason is simple. It's a psychological reason. And the reason is it simply does not make part of my watch list. That's it. It's a psychological decision, a very hard decision to make, because what actually attracted people to derive with binary was actually V75. And for you to say it does not make part of your watch list, that's like drifting away. Of course, yes, I am drifting away. That's called discipline. So, but today I was just looking into it, and because I've been trading well, I did not give any signals for V75 because I don't want to taste with other people's accounts. If I was going to be tasting and stuff, I'm going to be tasting with my own money or a demo account or something like that. Now, I noticed everything that we teach, everything that I've said on this YouTube channel. If you have not been watching my videos, if this is the first video, you're advised to check the previous 2, 3, or 4 videos. I'm going to put the links in the description. And you're going to familiarize yourself with what we always talk about. And I always preach 3 things. I talk of direction, and I talk of market execution on peak formation reset in a lower time frame. And I saw that it's gonna follow exactly what we always teach. And when it breaks structure, it always follows exactly what we teach. So that's what we're gonna look into. It's gonna be a very short video, but very informative if you have favors or any sort of love for V75, which I do not have actually, but it doesn't matter anyway. Let's look into it. So if I look at conditions, I always spoke of peak conditions, right? I want to see price rallying down, and I want to see indicator rallying up, right? I want to see price push down, and I want to see indicator push a little bit up. This is an example of what we call divergence in the market. This is divergence. So when divergence happens, it's a reversal sign. What divergence actually means, this is something that I always tell my premium students, that it means there is not enough sufficient volume to keep on pushing price to the downside. We know that indicators are lagging, so we're going to use this lagging to our advantage to interpret what might likely, I didn't say what is going to happen, but what might likely happen in the market. So we have divergence. Just after divergence, we had a break in structure. So the moment I have these two, the moment I have divergence and a break in structure, I am looking forward to see a break in structure. I didn't say the market is going to break. I'm just expecting a break in structure. Why? Because I've seen necessary confluences that usually happens before the market changes in structure. So I begin to expect a change in structure because I've seen it before. I've seen it change structure before, and now I'm seeing it again. So the likelihood of it repeating itself is high. That's why we say price is fractal. It's a matter. Trading is all about seeing specific conditions occurring over and over again, so that when they happen the next time while you watch, you expect something similar because you've seen it before. That's price action. It's factor. Always repeat over and over again. Cool. So I've seen my necessary two conditions. Perfect. What do I have? I am going to define this as a peak formation low, because this is a point where price is going to turn from the down structure to an upward structure. Pretty cool. This is not a long time ago. It's this August. You look at the date, around 11, 12 to 13 August. Now, I see a change in direction, but there is one more factor that I need. If you haven't watched the video of peak formation conditions, click, I don't know, the I above, anywhere around here. Oh, I'm gonna link in the description so that you watch that video. It has a lot of what I'm talking about right here. This video might not make a whole lot of sense if you have not watched, not actually this video, but this part of the video. So one more necessary factor that is missing after a breaking structure is a retracement to the proximate order block. So I have it right there. So the moment I have divergence, breaking structure, and a retracement to the nearest order block, I have defined a change in structure. So I am willing to begin to consider my buy side. I'm beginning to consider my buy side. That is if I have buying setups in the lower time frame. I'm not going to start buying whichever way I want. I'm buying. No. I'm going to start considering buying. That is if I have buying conditions in my lower time frame. Why do we trade in lower time frame? To minimize risk. There is nothing different between 1 hour, daily, 1 minute. Nothing different. But you have to realize that a single candle on a daily time frame can blow your account, but a single candle on a 1 minute time frame may not mean a lot to your equity. So that's risk management. We'll talk about that some other day. So I'm starting to consider buy. I'm going to buy this if I have necessary conditions on my lower time frame to buy. I'm going to talk about the necessary conditions in short, not in detail. So a beautiful condition for me to buy, and I'm going to take my profit around here. Why? Because it's a bounce on a 200 EMA. It's a call of attention. Indicators are not for us to use to trade. They are just call of attention, period. So I'm going to take my initial profits right there, or if I'm going to put break-even point or lock my profits, SLA entry, this is where I'm considering to do it. Movement of V75 from this point right here all the way up there is special. If you trade V75, you know what I'm talking about. And I'm going to show you a couple of trades after in the channel of V75 and its profit, and you're going to love what you see. I'm starting to look for another opportunity for me to re-enter. Why? To re-enter a buy. Why? Because my trend has been confirmed bullish. By what? By the necessary conditions that I'm looking for if I'm to buy a certain asset. This applies. What's going on, guys? So this is the official website of nicetips.org, and because you've watched this video and you've clicked the thumbs up button as well as subscribe to the channel, you have gotten yourself an opportunity to get a 30% insane discount for any of the purchase that you make here. To jump into that discount is just as simple as clicking on pricing, and you get to this page right here where it gives you like all the prices for our mentorship and course program. And by picking up any plan of choice, you are gonna get yourself access to an insane discount of 30%. That is for a $150 product. You're gonna get $45 off on your purchase just by entering a coupon code BTMM30. Right, I'm gonna put the link in the description below, and you see if you put in BTM30 coupon code, you're gonna get $45 off. Peace, guys. For all these assets that you see right here, V100S, V50S, just look for boom and crash. There is another video that I posted some weeks before. You can note that it's different, but these are just variations. I haven't priced retesting the 50 EMA on a 1 hour time frame. Remember, I have confirmed the trend, right? I have confirmed the trend. Now I have price testing the 50 EMA on a 1 hour time frame. Now, when price tests an indicator, it's a call of attention. It's not for you to enter a trade. It's a call of attention that, yo, you know what, bro? Be watching me. I'm right here, right? So the fact that we have price testing a 50 EMA on a 1 hour time frame, we're looking left. What do we have in the order block right there? So we have one order block retest and a 50 EMA. What are we looking for? Our attention has been called. We are looking for a buy opportunity because we're in a bullish trend. Pretty cool. So what am I doing? I'm gonna jump to a 15-minute time frame to hunt for a perfect entry in relation to buy. If I see an M like this and an ID50, anything that looks similar to the sell side, I'm not gonna pick it up. Why? Because the direction that I'm in is not aligned to the setup that I'm having. We trade direction, we don't trade setup. Setups are for us to get an entry that is in line with what you are looking for, with what you have planned. Great. It has a lot to do with your psychology and discipline. I'm going to look for another opportunity. I'm showing you directional opportunities, then we're going to jump into a 15-minute time frame so that I can show you entry opportunities in the same video. Jackpot. So if I see a buying opportunity anywhere around here, I'm looking forward to buy it, scale out some profit anywhere around here, and close some of the positions as soon as it hit 800 EMA. Why? Because it's a call of attention. Pretty cool. Now, for all of this consolidation, bounce between 850, or at a personal level, I wouldn't be trading this. Why? Because obviously the 800 is stronger than the 50. And for some reason, I don't think I was ever going to get a beautiful setup for a buy-side trade on a 15-minute time frame, considering all this consolidation that I was having around this area. But if I look into this opportunity and I look into this opportunity, these are perfect conditions. And I'm not going to repeat the very same thing. It's just a fact of order block and 50 EMA. Order block and 50 EMA. Again, order block and 50 EMA. Perfect. And it keeps on happening like that. Order block, 50 EMA. Again and again and again. Now, it's the very similar thing to the sell side setups. Selling trades are my favorite trades. I love selling. I don't know why. Not that selling is better than buying. I just love selling. Most of these assets, they're all to the downside after all. But anyway, we're not talking about that right now. So I'm going to scale out my chart and look at all the opportunities that I marked in white zones. And you're going to see very similar concept. Now we're looking for opportunities to enter. Opportunities to enter include, pardon that guys, opportunities to enter include a bounce on the 200 EMA and a divergence. A bounce on the 200 EMA and a divergence. Pretty cool. Right, bounce on it, oh, pardon that guys. A bounce on a 200 EMA and a divergence. Now, entry depends on you. Some enter on LSP and retest, some enter on 13 EMA up close, but we are looking for conditions right now. Remember, trading is all about conditions that keeps on repeating over and over again so that when you see them the next time you jump in. So let's look into that. One, where is my 200 EMA? Right there. Perfect. And I see price falling to the downside. Perfect. And indicator beginning to show me some signs of upward movement. Pretty cool. So with that being said, I'm gonna look forward to enter a buy all the way up there. I could pick my buy right there. I could have picked another buy right there to make my entries to TP1, TP2. Perfect. That's how I send my signals. Another opportunity to enter. If you look at this and this, there is not much difference except that it happened on separate days. Order block and right there, bounce on the 200 EMA. Now let me look into it. I see price dropping to the downside. I see indicator valuing to the upside. Perfect. I'm looking for a buy. The other conditions that I sent was right here. But in this case, I didn't have a divergence, but I have an exhausted TDI, aka shark fin. It all depends on who told you. Right, so I have order block, a bounce on a 200 EMA, and this time I have a shark fin confluence when the RSI is out of the band. So I'm looking forward to a buying condition. Perfect. And it's gonna keep on occurring like that, over and over again. What is trading? Trading is an action of you identifying specific conditions that happen over and over again because price is fractal. So that the next time you see it in real time, you are gonna kill it. With that being said, peace guys, I'm out.